hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears.
I think I'm live, but I'm not ready. So it's going to be a little bit.
Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer.
There we go. Okay, I'm live.
Every morning I wake up to
I'm going to hit the thumbs up button.
My heart starts to pound.
More Rosa.
Trading podcast in my ears, guiding me through my hopes and fears. Tune in
Pin
daily,
that.
don't miss
I'm gonna
a
be
single
right
show.
back.
Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.
Good morning. I'm just
Tune in daily, don't miss
getting
a single
set up.
show. Sign up for
Hit the thumbs up
newsletter,
button.
let us help you grow. Taking
I had
risks,
to
making
go
moves,
and
seeking success. Together we'll conquer,
look
no
at
room
this.
for any less. Listen
And
now.
usually I do this at the end of the podcast, but I'm doing the thumbnail right now. Okay. I don't know, Larry. Maybe I'll ruin things, but the thumbnail actually looks pretty good. I need to sign out of this. Sign out. And then just make sure premium is there. Make sure that's there. Hold on, I gotta turn down this volume. I'm hearing an echo. Then Trendspider. Same pricing. Did they go on sale? No. I am doing a collaboration, by the way, with Trendspider. And it should be a pretty good one. We went over the topics a couple of days ago. Oh, wow. BLDR. Huge insider buy. 31, let's see, about $50 million at 110. And it's trading at 119. I don't know if that's worth kind of mentioning, but I mean that's the first insider buy. Let's say. I mean, shit, couple years. I can't see past that, but ooh, are you playing today? With the players that live? Or are they doing it in Sawgrass? I don't know. I don't follow the Live Tour. I don't know, and I don't have. I do have an issue with the Saudis, but obviously not as much as. I guess the Saudis have gotten a pass on 9/11 now, and killing Khashoggi. I mean, maybe they just we're gonna look past that. Probably shouldn't, but hey. Yeah, we're looking at a red open. Are we looking at a red open? I don't know. Let me see. It was the CPI was just released, so April has slightly beat core measure trails consensus. Okay, I want to look at. Let's see. PPI should have come out as well. I'm not gonna worry about it. Let me see. Philly Fed rose to 4% versus 10% consensus. Blue Owl announces $7 billion on final closing digital infrastructure. Allstate estimated catastrophe loss of $594 billion. Bridgestone, New York Manufacturing Index, that's 837. NetEase declares quarterly dividend. April retail sales. Headline producers price explored. That was at 834. Alibaba's solid full year overshadowed by missed targets. I probably should include that in the BABA. Yeah. I'll include that in the BABA one. Because I think I had a shitty BABA article. Let's see. Earnings. Yeah. We're just going to put that one in. Okay. And let's go down to 830. Stall in the past week in line with consensus. So initial jobless claims, I mean, they're just in line. In focus, Mizuho downgrades. Wow. I'm glad I trimmed it. Wow. Oh. Huh. Scotty will win and Phil will choke. I thought, is it? I haven't looked at golf in a little bit. I need to figure out the golf schedule. I've been so damn busy. I am doing a guest appearance on a podcast today. I got invited back to do investing experts. I don't know if I asked or if they asked me. I forget. I think I put a comment down on one of their podcasts, and it was a really good one, by the way. If you haven't listened to this one, Investing Experts, do I have it? No. It was with Barry Ritholtz. I think it's a couple of days ago. But Rena just messaged me that we're going to do another one next week. Next week, we're going to do it. Yeah. He's short Walmart and long 3 shipping stocks. He's short Walmart. This one's it. Make fewer investing errors with Barry Ritholtz. Rena did this one. It was great. It was great. Now, this guy is short Walmart, and Walmart's up 65% in 1 year. I am not. In fact, it's funny because what did I just tweet out? Let me see. I tweeted out, this is why I try and stay in my lane. I'm not a macro expert, a bond expert, a trade expert, a tariff expert, a foreign expert, but I do have a good history of investing my own money and making money. So sometimes my thought process can help others, because this guy said the 2 big losers today, and this was from 3 days ago. This was from, Monday, I guess, with the China tariff thing. People hoping for a Trump-led economic catastrophe they lost. Members of the Big Chess Party, again, who thought the tariff announcement was some brilliant strategic plan that would reshape the global economy in a way that was beneficial for the U.S. It didn't. And also macro podcasters calling for the decline. So we are still not out of the woods. I don't think we're, yeah. Maybe I'll touch on it, but I mean, it is time to cut rates. I think the rate cut debate is, I don't know if Powell's going to do it because he doesn't want to help Trump. But I think he's very non-political. I watched the first 10 minutes of this. Chris Camillo is just, he's just one to listen to. This was a stop selling your winners. Great. I watched, I think, the first 10 minutes of that one. Baba. Oh, man, it didn't. Why? Hold on. It did the same. There we go. We're going to copy this. Copy. And I'm going to. Okay. Let's see. Open with Google Chrome. There we go. Okay, now that's open. The biggest stock movers. It's all earnings, and it's freaking Foot Locker. We'll go over that. Because just so you know, Foot Locker was purchased by Dick's. I'll go over the story. It's going to be in a descending order, where it was announced yesterday that there was a rumor after hours at 5:30 last night. And boy, Dick's took off 100% gain. I do think there's a bullish sentiment for PayPal in this headline, because I use Perplexity so much. I don't think it's too late to get into Hood. Neither does Tom Lee, because he just added it to Granny Shots, which is bullish for that one. Not huge, but bullish. The scanners in Trendspider are just unbelievable. And Boeing, Trump's using chips, but he's also using Boeing. And Boeing's just had a historic run. Just crazy run. I am going to do a collaboration with Trendspider, and Go No Go is actually in the itinerary of what we are going to discuss. Saudi Arabia AI deals are just an eye-opener. That's just duh. Not only are companies buying chips, but now it's countries. And United Health is what I thought it was going to be. It is what I thought it was going to be. And the market is just a funny place. Because it's oh, and I should, you know what? I'm going to tweet this out. Great list of ETFs by flow. Okay. Why is that not? Copy. Oh. Do I have to actually screenshot it? This is a screenshot of a screenshot, so good luck. There we go. And we will open that one. Okay. We're going to get that one open. I'll go over this is, by the way, it's such a good movie. Such a good, and if the this is my quant quote went over your head yesterday, it's a great one. I got another alert on, can I show this? Hey, Penny. Can I show this one? Maybe I can. Let me see. Yeah, I can show that. I can show that. Walmart. I mean, Walmart's up 65% in 1 year. Just saying. Just saying. And one of my largest stocks is in the crosshairs. So, not great. Not great. Amit kind of goes back. I think he may be a subscriber of mine because he asked the question a little bit after mine. But Warren Buffett revealed why he stepped down. And anybody with aging parents will understand this one. And I just went over that. So let's see. We're going to go back to QQQ. I still have not gotten a liberation date, but I think it's because it's 2 candles. I think it's going to come next week. Okay. Meat Stick, your name still cracks me up. Oh, did they? What, the stock, Nathan? They brought up the stock? Was it rich money that brought it up? Or dumb money? There's dumb money. There's rich habits. With Austin. Austin seriously sounds like a 50-year-old black man who plays jazz guitar on the weekends. I mean, that's what he sounds like. And then you pull it up and he's basically, Revenge of the Nerds. Oh, when to buy and sell. Yeah, I mean, that's just a nature of learning, I think. Let's see, is there anything? Pepsi's up, Coke's up. Coke, I have my to-do list, by the way, and I will share this outside of the podcast. So my to-do list, just so you know, I keep a to-do list of things to do in my portfolio. Coke, get it down in size. I realized it's too large of a position in my portfolio for me to feel comfortable. I'm going to get it down. I think it's like a $2,000 purchase is now like $25,000. And so I just continue to trim it. And then I buy it back at 60. So it's just a matter of managing that. Salesforce, I am going to trim that one and probably either buy ServiceNow or QQQM just to buy and hold. Sell Google and buy TQQQ. That's the goal. Trim XLK in my brokerage account. Trim Uber in my brokerage account. Add it to an IRA as it pulls back because it is at all-time highs. Trim IGM. I own a ETF, a tech ETF, IGM, in my rollover in Roth, and both of them have hit pretty close to highs, as well as XLK. And trim IBIT in rollover IRA, and trim Walmart. There's my notes. I mean, that's my portfolio. I don't like to share it out there, but I thought, yesterday I did my, hey, I'm going to look at this stuff. So, activate to earn 5% on grocery, gas. Oh, wow, I can earn 5%. Huh. I got to do that. I think both stocks meat stick are broken, but I don't try and time the bottom in those things. I will tell you, I sold UNH at $550 and I haven't gotten back in. So, trimming Walmart because look at it. As it gets up to that 103, why not? It's at 96 right now. It actually was at 98, and now it's started to pull back as the market's open. Its valuation is, the PE ratio 37 going forward. For a retail stock, for me, it's a little bit expensive. Even Costco, and I've talked about Costco before. I got rid of it because it's 54 times forward earnings. With its growth, at 6%. I just think that retail stocks, the two that you own are Walmart and Costco, and trimming it, not because it's a bad stock. I'm just trimming it because look at the all-time high and look at it. And it's a $2,000 investment that is like $40,000 for me right now. I think something like that. It's a crazy, crazy amount. So, Mark, I did not buy Google as part of Alpha Picks. It's one of those stocks that I already owned with Alpha Picks. So I've trimmed it already as part of my own portfolio, but I'm managing that one outside of Alpha Picks, just so you know. And this is just part of portfolio management. It's all personal opinion. Again, if I didn't have, so much Walmart, this is years and years. I think I initially bought Walmart in 2011. And, I can look at just to give you an idea, let's go look at a yearly chart. Yearly candles. And so you look at that one, 2011, it was selling at $17. So 2011, it traded, low of 16, high of 20. So when I say trim, I am literally trimming stock that I bought in 2011. And then I'll buy it as it starts to come down a little bit more. So I'm taking long-term profits. I don't need the cash, but at certain times, you're just like, hey, why not? It's up there. We're stretched. We know we're going to see volatility. So it makes sense that you just kind of trim. So, okay, let me get started because it's already 9 o'clock. I got to get this boy going because I do have some stuff to do today. And at 10 o'clock, I've got something, I think Tokyo Sims, my girlfriend's son, he's interviewing a new manager. So we're going to talk. Oh, I shouldn't have said that, but oh well. Apple's down 1%. Amazon's down 1%. Costco's actually up. It's on Walmart earnings. Eli Lilly's up. Meta's down 1%. Palantir's down 1%, Qualcomm's down 1%, Tesla's down 1%, Uber's down 1%. It's not shocking that it got over 90 and then is pulling back. That's not shocking at all. Target, the only problem I have with Target is I don't shop at Target anymore. I mean, that's literally it. But okay, let me get started. Good morning. It is Thursday, May 15th. It's CPI day. I know CPI came out. I know the jobs number came out. I'm pretty sure CPI came in and we need to cut rates. I mean, that's all I'm going to say about it. I haven't studied it because you know why? Here's the overall truth. I am not a macro expert. I am not an economist. I am not a bond expert. I am not a trade expert. I am not a tariff expert. I am not a foreign policy expert. I am simply a guy who has done really well in investing and taking news and just turning it into investment thesis and understanding that buy and hold is a far greater thing than trying to trade around positions. So the large majority of my portfolio is buy and hold. And so we're going to go over, Walmart, great earnings, fantastic earnings. I'm trimming. Why? I'll go over it. We'll go over a lot of things, including at the end. So stick around to the end. I have a healthcare idea on a short squeeze. And it involves two stocks that I have brought up on this podcast. Now, I want to bring up, I'm going to go over to the chart, but I do want to bring up on Spotfiy. I think I have like 30,000 followers on Spotfiy and 700 ratings. So if you are listening to this podcast, okay, go down on Spotfiy and hit the 5 stars because some douchebags, I've been hit up on a hate thing, probably from anti-Trump people or Trump people. Who knows? Because it just depends on the day where people label me, whether I'm a pro-Trump or anti-Trump. It just depends on the day and it depends on what I say. But they've gotten me down to 4.7. F those people. So even my Uber rating is a 5.0. And it annoys me that I'm a 4.7. So what you can do for me is go down and just rate me. Now, after you do that, if you're watching on YouTube, hit the thumbs up button. Whether you're watching or listening, wherever you are, just do me a favor. Help boost me a little bit. And stay tuned to the end because there's a bonus, a bonus stock. I am doing a guest appearance on a podcast today. And I will be doing Investing Experts again next week. And so I've got several other podcasts that I'll be doing. Now, just understand, again, I point this out. I am not an expert. So if you're going to listen to me, understand, I will swing either political direction, whichever one I think is right. Like RFK in his testimony yesterday went off on Democratic senators, rightfully so. Because he said it perfectly. He said, I've wanted you folks have talked about getting food dyes out of the food coloring, and I did it. Well, he hasn't done it in law. He did it through the FDA. So again, he pointed it out. I think he's 100% right. So again, politically, it just depends on which day it is. So don't take me for anybody political. Don't take me for taking a side. I am simply looking at things through my lens. So I'm not an expert, but again, where are we on the Qs? We are going to trade down a little today. I think you start to rally towards the afternoon. I could be wrong, but I have a feeling this is still not a done rally. But we are going to see a pullback. You know why? Because the Qs right now, the RSI is at 76. Remember, 70 is overbought. The RSI on the Qs is 76. Am I upset that I bought earlier this week and we're not too far up? No. Could I have timed it better? Probably, because I do think that we see a pullback. I don't know if it's today. I don't know if it's tomorrow. I don't know if news comes out over the weekend that's bad and then something happens. But I do think that the market wants to continue to rally. There are some pullbacks in some major names. But the Qs overall, it's only down 0.44. And if you go and you look at VOO, which was one I also bought, that's down 0.36. Now the Dow is down because United Healthcare, we'll go over that one. It just can't get a damn thing right. I am so glad I sold that at 450. I think last time I checked it was 288. And it's continuing to fall. VOO, the 4-hour algorithm on VOO is fantastic. You want to know why? Because over 24 months, it wins 63% of the time, 19 positions. Okay, it loses 37% of the time. Your average win is 4.62. Your average loss is 1.46. That means you're actually making more if you traded it in the algorithm over the past 2 years. 53% versus 42%. And it's a fantastic tool to use. Again, I'm using my tools. VOO, did I buy it at 484? You bet I bought it at 484. You bet I bought it at 529 or so during this day as it crossed the 200-day. I dollar cost average, but what I do is when I need money or I see a downturn, I am selling long-term holdings. Okay? Long-term holdings means I bought this 5, 10, 15 years ago. That's how I manage my portfolio. So I'm not an expert. I am not a great protector of capital. I lose more money than most people probably would feel comfortable with. But that's the reality. Now, the greatest investor of all time, Warren Buffett, he said why he handed over the reins. He started to see his age. What I found interesting about this article is the old fucker was still working 10 hours a day. And basically he said, hey, I'm not accomplishing as much as Greg Abel with it, the 10-hour days that we're working. 10 hours a day at 94 years old. I can't believe it. Unbelievable. Unbelievable. Now, I also wanted to just point out tools that I use. Why I love Fidelity. And Fidelity is my main broker. Yes, I have a Webull account. And yes, you can sign up for a Webull account right here on Linktree. It is down. It's like the 5th one down. I put $1,000 into Webull, and I will look at it live right now to show you my actual account. $1,000 turned into $11,600, $11,632. Yes, I did that. But my main account is in Fidelity. I would never trade the way I do in Webull in my Fidelity account. And part of the reason I like Fidelity, I got an invitation yesterday to a live webinar where you can ask questions and you can do it for options trading. It's always free. Their educational section is beyond amazing. Okay? So if you're interested in becoming a Fidelity customer, you can email me. Just email me. Go over to Linktree and my email address is up here. And I will hook you up with my financial advisor. He is fantastic. And it's a service that comes free. They get you in and you can have a meeting with a financial advisor and go over any plan that you have. That's why I love Fidelity. Now, one of the things that I talked about yesterday was Fear and Greed. This is a myth. He's got hundreds of thousands of followers. It's 188,000. I think the dude's a subscriber because he just said, are you selling into this strength? I pointed it out yesterday, the Fear and Greed Index. We're in greed. Okay? So the reasons to sell, no rate cuts coming. I think that changes with CPI today. Markets are getting euphoric. Yes. There is FOMO. If you're feeling like I've got to buy in, that's a market euphoria. And taking some profits is healthy. Again, why am I trimming? Taking profits is healthy. Reasons not to sell? There are more trade deals on the way. Inflation is coming down. AI investment only accelerating. The toots missed and will push us higher as they buy back in. Okay, that's the hedge funds. So, again, why do you want to do it? One of the problems. Oh, I'm going to bring this one up. Open with. I want to show you this one because I said yesterday, this is my quant. No, we're just going to go over here. Okay. Yeah, I said yesterday, this is my quant. And that's my quant. It's a quote from the Big Short movie. Do yourself a favor and watch the movie. I'm not going to play it here because I'll get a bunch. But essentially, this is my quant, is the greatest line in this movie, and this is the greatest scene. If you want to see this scene, go over to my my Twitter, and I posted it up there. Now, one stock. Let me go over this. Yeah. We heard yesterday from Trump. He made an offhanded remark about Tim Cook not being here, when Jensen Huang was, something of that sort. And we didn't see Tim Cook. We kind of know why. I mean, Trump just said it out loud now. I mean, over Apple's earnings, they were touting how they're building in India, avoiding the Chinese tariffs, and they've moved a significant amount over there. And so Trump is bashing Tim Cook now for building. I had a little problem with Tim Cook yesterday, said Trump. He is building all over India. I don't want you building in India. As a result of the conversation, Trump said Apple will be upping their production in the United States. He is basically publicly shaming Tim Cook. Now, here's what he doesn't know, and here's what Tim Cook won't fight back on. Because Tim Cook is a very, very smart CEO. So he knows, all I'm going to do is promise to up the production here. But your iPhone won't be made in America. It just won't. But what Trump doesn't know is it's not Apple building in India. It's Foxconn. It is Apple's partner that does all the manufacturing. It's not them. So Apple actually investing in production here in the US, it's them investing in the smaller pieces of their production, not iPhones. I don't want a $4,000 iPhone. And that's what happens if you move the production here to the US. I was going over my list of stocks yesterday. I basically look at my portfolio pretty much on a weekly basis. I don't know if I look at it on a daily basis. I do have my ideas and I put them out there. But my to-do list of stocks is just, okay, I have to do this within the next week. I have to do this within the next few days. I have to do this. Okay? I realized that in many of my accounts, cash is still a top 5 position. It still is. I was shocked. It still is. I am still 80% invested, so 20% cash. That's not a comfortable position for me. I want to be 95% invested, but I don't trust the market. And like I said at the beginning, I do think we see a pullback. So I realized that in 2011, I put $2,000 into Walmart in one of my accounts. It's now worth over $16,000. That's just one of my accounts. So I probably have it in other accounts too. I just don't care. But I want to trim it. I wanted to trim it before earnings. And as they released earnings, that was a bad decision. I didn't get the chance to do it because it was up when they announced earnings. They topped earnings. Costco and Target higher as well. They topped earnings. But what's happened? The market has sold it off. And why? I think it's people taking profits. And when you look at this, the 4-hour algorithm got you out here, and I should have trimmed it. I didn't have an alert because I typically don't look. A $16,000 position, I'm not even looking at my account at a $16,000 position. I'm just letting it grow. And that's what I've done with Walmart. If we go back here, let's go to a monthly chart so that we can actually see 2011. Look at that. I mean, is that a stock that you want to trim? Maybe in 2015, maybe in 2018, maybe in 2022, but I just didn't. Again, it's a smaller position. So my to-do list was to trim it. 1 year, Walmart is up 65%. Let's just go and look. 61%. It's up 61%. But its valuation, the PE, is 37 times forward earnings, where the sector is 16. I don't want to own a large position in something like that. Costco is the same thing. I got out of Costco because I just don't like the valuation. I got out in the 800s. I still love Costco. I still go to Costco. But I got out just based on valuation. So when I looked at Walmart and I said, you know what? As it runs up towards this gap here at 100, I don't know that it's going to fill this gap, but I wanted to trim. And it was at 98. I didn't get the chance to trim it. Should have sold it in there before. But again, I don't think it's coming back up here to 105. The valuation is just stretched. And that's what people are realizing and think that's why they're selling. If we go and look at the after hours on this and we look at a 5-minute chart, look, it was good. 7 o'clock, earnings come out, and it's slipped ever since. People are profit taking. That's all that means. So just understand what you get yourself into and how to manage your own portfolio. And Alphabet was removed from the Alpha Picks portfolio. And I think I can go over this freely. Alphabet was added September 1st, 2023, has remained a quant holding for 180 days, warranting it's a hold. So they are a rules-based portfolio. This is Alpha Picks. Am I managing Alpha Pick? Am I managing Google in my account based on Alpha Picks? No. I trimmed it before they did. Now, I'm not saying that I'm a soothsayer or anything of that sort. They are rules-based. They trimmed it because it was a hold in the quant for 180 days. But you can see the algorithm just got you in. Now, are you getting into Google? Well, Google for me, it's being held down. I went over it yesterday. I think they will lead in monetizing AI because they're going to replace your employees, your engineers, with AI within a year. And that's going to be huge. They're going to be able to charge $60,000 a year for a chatbot that will be able to do engineering type stuff. So I'm not getting rid of this one. The valuation, they mark it as a D. It's 17 times forward earnings. I would argue that's not bad at all. If you go and look at the PE of this one over time, that's fairly cheap. Look at that. I mean, that is cheap. 3 years, and then you go 5 years, and you go even 10 years. It's cheap. But the market is focused on search revenue, and that's it. So they released it. They sold it off in the Alpha Picks portfolio. Now, if you want the Alpha Picks portfolio, you can get it on its own. Okay, over here, $50 off your Alpha Picks subscription. It beats the S&P. It is 2 data-driven stocks. We are going to get one at noon today. On the 1st and the 15th, they tell you about when to buy stocks. They also, like yesterday, hey, we're going to sell Google. They also sold a stock earlier in the week that is a mega cap stock. Okay? They are trimming, and they beat S&P. It has taught me so much about portfolio management. I can't tell you enough. Now, there is another thing. We talked about the quant. The quant rating is how they rules-based it. If you want the quant rating for thousands of stocks in the market, that's Seeking Alpha Premium. And you can get that with a free 7-day trial and $30 off by signing up on Linktree. That's the third link. But there's a better offer out there. And it's Premium and Alpha Picks together where you save $159 off. And that's the second link on Linktree. That's the one you want to go to. So I also, by the way, I didn't include this, but we're going to look at this. The trading desk, I'll include it in the newsletter. The newsletter is free. But the trading desk, I got another alert. Because this one went from a sell to a hold in the quant. And today's the first time as a hold. Now, we talked about this one. I set up these alerts in Seeking Alpha for the quant rating. So every time the quant rating changes on this stock, I get an alert. It's how I track that stuff, because the quant rating is basically rating this stock on 5 factors: valuation, which is an F because it is expensive; growth, which is an A because they are blowing it out of the water; earnings per share, 104% year over year. Okay, profitability, 80% gross profit margin. Levered cash flow, 26%. Momentum, it sucks. Okay, all of the fundamentals are good except for valuation. The momentum is bringing this one down, and analysts are bringing their revisions down, but that's starting to change. The last earnings were good. And when you look at in Trendspider, you can see the 4-hour algorithm has made you 65% over 33 days. And as we get towards 85, you start to gap fill. And if we can gap fill from 85 to 120, that's a damn good trade. So I want alerts on for that. So I like that one. Now we're going to look at yearly candles of SPY. Okay, I'm going to look at SPY first, but we're going to look at yearly candles because why do I think there's going to be a pullback? Well, if you look at these yearly candles, and this is just yearly, you can see, are there 2 in a row that actually wound up negative? No. You've got 2000, and then you get to 2002. 2002, so you had 2 years of that bear market. And then it turned into a bull market where the years were actually up. They were positive, okay? Then you had 2008. 2008 is the only, that's the only year during the financial crisis that the market was down. Yes, it was down 38%, but you started to recover. And then 2011, you had a pullback. It was 0.95%, not even 1%. Okay? Then you get to 2015, it's a 1.2%. Maybe some stuff went on there. 2018, during Trump's first tariff war, that's Trump's first tariff war. Make no mistake, because it happened in November, and it was a quick pullback. You were down 6%. Then you had 3 great years. I mean, this is COVID, okay? COVID, which opened up at 323 on SPY, closed at 374, a 15% gain. You would have thought COVID was a negative year. No, it was positive. Then you have 2022, which was down 19%. And then you have this year so far. You're down 0.31%. So the point is, again, the point is that we haven't had a long bear market. We just haven't. You have to go back 20 years, 25 years to 2000 to 2002, where you had anything more than just a 1-year pullback. Now, does that say anything? 2025, it was a man-made crisis. 2023 and 2024, these are 20% gain candles driven by the Mag 7. 2022 was the only orderly bear market we had. And the reason for that was so clear. You had to raise rates. It was clear as day. Today, I want to point out, if you go over to market data and you go to bonds and you look at the 10-year, we haven't taken a look at this recently, but it's up near 4.5%. You can see 1 month ago, it was at 4.35. Now, if you're down in the 3s, there's a problem. But even higher, it's telling you that maybe the stock market has run too far. I think it's signaling that our debt is a problem. It's going to be a sticky issue. It's going to be a sticky issue. So I'm just pointing that out, that I think as we get into these budget discussions and the great big bill, it's going to be an issue. Now, I want to point out over the last month, some of these I've never even heard of. Okay, SGov, I've never invested in that one. SMBS, I've never invested in that one. But look, number 4 is IBIT. The top 10 ETFs by inflows, month ending. That's huge. And by the way, QQQ isn't in there. People have gotten smart. They're buying QQQM. At the bottom, you can see it. VUG, which is the growth Vanguard Growth, the total stock market index. I was part of the high net worth group discussion yesterday. People are buying these types of stocks. It's interesting. So, United Healthcare. Let's talk about this one. They are now being probed by the DOJ for potential Medicare fraud. Okay? I've said it before. I don't think there's any winning in United Healthcare. I mean, correct me if I'm wrong, but I think with all of these discussions about the great big bill, one great big bill, what are they trying to focus on? They're trying to focus on Medicare and Medicaid. They're trying to focus on cutting costs. Who's the largest insurer right now? It's United Healthcare. They are down 10% at $279. I sold out as it came back here to $550. And I haven't gotten back in. I just don't trust this one. And by the way, that was here in December that I sold out at $550. It might have been January. But I sold out at $550, and it was after the Luigi crisis. And I said back here in January, I'm pulling it out of the core portfolio because there's too many distractions. And then they said, hold my beer, we're going to get worse. And the CEO resigns unexpectedly. Something's up. Something is up. You can't time a stock. And I will tell you, the market's a funny thing. Palantir generated $1.3 billion in free cash flow last year. The market cap is $300 billion. Okay? United Healthcare generated $25 billion in free cash flow. The market cap is $285 billion. Okay? That's crazy. United Healthcare is creating 25 times Palantir's free cash flow, and they have a smaller market cap. The market is a funny thing. It is about what people will pay. And this is it. Bill Ackman posted this in February. When a company, in this case, United Healthcare, attacks its credits, the probability that it is committed fraud or is guilty of a crime increases substantially. This morning, the DOJ announced an investigation into UNH's Medicare billing practices. The DOJ did not do this lightly. My psychological short here is paying off. Again, he had this in February. If you look at this in February, where were you? If he's been shorting this stock, he is fantastic. It was at 544 in February, and it's just been down ever since. Boy, it got a nice run after that. And that's when I added it back into the core portfolio thinking, hey, it's all overblown. It's not overblown. It is a broken stock. You can't go chasing something like this. You just can't. And I've been saying, we're in an AI market. This proves it. Saudi Arabia AI deals were bullish eye-opener for tech investors. This proves it. Countries want AI. It's not just hyperscalers. It's not just companies want AI. We are now using this as currency. You will have governments pushing for American AI companies, software and hardware and hyperscalers. It includes Palantir. It includes NVIDIA. It includes Amazon. It includes AMD. And it includes Cisco. And I would add in VRT as well. Okay? As much as SMCI has been up, VRT over 1 month is up 53%. This is liquid cooling in the server racks. They are one of the best. And the 52-week range, you're right in the middle right there. Okay, it's high as 155. You're trading at 105. If you can get VRT under 100, I like it. I like it. But again, we're in an AI market. And AMD announced a huge buyback. Okay, and I am going to be doing a collaboration with Mike. He's the new Jason from Trendspider. It's going to be in the next couple of weeks or so. We've had to put it off. I was trying to get it in before before Memorial Day, but it won't happen. But this is go, no go. This is on the agenda to go over. So you're going to want to tune into that one if you have Trendspider. If you don't, you're going to want to tune in because these colored candles, the blue ones, mean buy. It's a go, no go. This is an algorithm with a colorized candle in Trendspider. And the blue means go. You can see blue right there. Got it wrong back here. But the valuation is reset and they are buying back their stock. Let's look at the 4-hour algorithm in AMD. Does that one work? Let me put in AMD. There we go. AMD, 4-hour algorithm doesn't work. I wouldn't use it on this one. Maybe the 65-minute. Let's see if a shorter time frame. No, doesn't work. Let's see the 1-hour stock battle. Maybe that one works. Yeah. You know what? It makes you 17% over the last 61 days. There's 15 positions, but over the last 61 days, the backtesting starts here. Backtesting starts there at 100. You're trading at 117. The backtesting is all of these entries right there. How can you get Trendspider? You can go over to Trendspider right here on Linktree. The link is down below. It's right next to my head, linktr.ee/daily stock pick. And you can sign up for Trendspider. You can try it out, or you can save a bunch of money. You can try it out. I think they still have the plans where you can try it out. But it's $52 a month. If you can't make $52 a month, you're probably not trading enough. But I use this to actually manage my portfolio. Like, for instance, if I go into the 4-hour algorithm, into Apple, okay, Apple makes me 25% over the last 2 years. I'm not selling, but I am buying when it tells me to buy. I bought a little bit at 209, not much. I still have too much Apple in my portfolio. I'm not comfortable with it. And while we're not using AI, we are using Boeing as capital. Boeing's deal with Qatar, what is it, 149 planes, 10 additional, 20 jets, 10 additional aircraft, 210 wide-body jets from Qatar, 210 wide-body jets. Boeing has been on a historic run. But understand, Boeing's problem has not been orders. Boeing's problem has been deliveries. And that's the issue. While you're having this run, and I think it's a 204, probably getting back to the 220, and you're trading right now, let's see, at 207. So it'd still be a good run. It's overextended. The RSI is at 79 on this 4-hour. Now you look at the weekly, and we're just getting back up there. This $400 stock, it won't be a $400 stock. It's not expensive, but it won't be another $400 stock until they start getting deliveries right. Wait for a pullback on Boeing because it is coming. There will be a pullback. And if you want to trade the 4-hour algorithm, I will just show it to you. I mean, look, down below my head, there is a white text that says performance chart. 57% versus 3.9% if you actually just buy and hold. Over the last 33 days, you've made 34%. Your average win in the 4-hour algorithm, 9.9%. Again, it's a tool to try and help you to trade. Trump is using Boeing, again, to get money into the U.S. Now, maybe you don't like the 4-hour algorithm, but you just want to run a scan. Just ran our weekly falling wedge breakout scan in QQQ. And you can go over here to Market Scanner. I have a daily stock pick scanner where I look for entries in the 4-hour algorithm, and you can scan based on that. Let's just go to the watch list. Are there any in the 4-hour algorithm? Let's see. It is looking, nothing in the watch list. So there's nothing right now that I would be looking to trade. But say I want the weekly falling wedge. Let's say wedge. Let's say wedge. Falling wedge based on volume. Falling wedge breakout by Trendspider. There we go. Let's go over here. Let's scan it. And it's on the, we're going to stop this. We're going to run it on, let's do an index, and we will do it on NASDAQ 100. Let's just run it on there. Because they ran it yesterday. Let's see if anything comes up on this one. Google has a falling wedge breakout. ODFL, Intel, Amazon, Tesla. So what did they say? ASML, AMD, SMI, MU. And you can see it's a falling wedge that it automatically identifies. And then it identifies the breakout, usually leading to more of them. Okay. And Bullish Bites even commented, hey, they're looking good. All of these, ASML, AMD, SMI, and MU. So if you want that, again, get Trendspider. It is included with Trendspider. Even in your trial, that's included. Now, I say it's never too late to add Hood. I don't own Hood, but Tom Lee's Granny Shots just added it. If I want to add Hood, I'd like it to be some type of strategy that allows me to trade it. So let's look at Hood in the 4-hour algorithm. It works phenomenally. 619% versus 599% over 24 months. Okay, take $1,000, go back 24 months ago, you're going to trade 22 positions, you're going to win half the time, you're going to lose half the time. But you're going to have $6,000 at the end of that. The entry was 40. I want to enter when the 4-hour algorithm tells me to, not when the RSI is at 68, not when the MACD is up 3 points above the oscillator where it's rejected before. I want to add during a time, even though you have the golden cross happening right here. I want to add at the right time. So Tom Lee adding it, I want to find a strategy to actually add it myself, and I will. I've got alerts. You know what I can do? I can go down here and I can say, alert me next time this happens. And I'm going to create alert. And boom, now I've got a Hood alert that's set for an entry. That's it. It's nice and simple. And now I'll get a text and an email that tells me, hey, you want to buy Hood. I set it up. Nice and easy. I don't have to sit there and watch a chart. I don't have to sit there and wonder. I will get it. That's all part of Trendspider. It's why I save time. Now, this might be bullish for actually PayPal. I use a ton of Perplexity. You guys know I use Perplexity because I bring it up all the time. Utilizing PayPal for direct purchases within search. That might be bullish. I don't know if it is. I don't know if people will actually use it. I don't know how many people actually use Perplexity. But the feature is a step above Microsoft-backed OpenAI's recent shopping feature. It aids shoppers using ChatGPT, but still requires them to leave the chat box and go to another site or app to finalize purchases. They are integrating this into Perplexity. I do think OpenAI is behind the gate. I think Perplexity and all of these wrappers, they're called wrappers because what do? They use DeepSeek. They use Google's Gemini. They use Meta's Llama. They use all the open source, and they can use ChatGPT, but it's just a wrapper. Perplexity is just a wrapper, and it is far better than I've ever had with OpenAI. Now, Foot Locker is up 82%. There were rumors last night that Foot Locker was going to get bought by Dick's Sporting Goods. Okay, it was up about 60%. It was up big. And we can look at this after hours. Okay, I'm going to go to a 5-minute chart and I'm going to hit the after hours right here. And so you can see it was just flat yesterday at $12. And then this news came out. It was at $20. Okay, I thought, you know what? Maybe I do want to buy this one at $20 because if they are going to buy it, maybe it's worth the risk and reward. Well, probably was worth it. Now it's come down quite a bit. The MACD and the RSI have come down quite a bit, but Foot Locker is capped at $24 because it was announced this morning that based on the closing price of Foot Locker's common stock on May 14th to $24 per share, consideration represents a premium of 66%. Okay, but shareholders can elect to receive either $24 in cash or 0.116 shares of Dick's Sporting Goods common. So you're going to be capped at $24. You're just going to be capped at $24. And that's how if you get news on something and it looks too good to be true, sometimes it isn't. Sometimes it's just true. Now, the biggest stock movers of the day, you got Cisco after the company topped estimates. We're into earnings right now. It's all big movers. Okay, Biogenomics was up 20%. BNGO, BINGO. I sing that song every time I see that symbol. Shares jumped as the company reported 26% year-over-year decline despite the drop. Bionona, improved gross margins is 46%. It's up 20%. Foot Locker, we just talked about. Now, Luminar Technologies down 10%. New Fortress, NFE down 31%. Alibaba reported earnings. They fell. The earnings, again, solid full quarter four, overshadowed by missed targets. The targets were missed. And Alibaba is back at 124. I've said it before. I think that might provide you some support. We can see 120 right here. Where was it? It was old resistance. Does this come off the weekly? It might come off the weekly. Yes, it comes off the weekly. So if we look at this pullback right here, okay, this was 2020 into 2022. This stock didn't do well. It ran up in October 2020 and then just shot down. I owned it during this time. I think I sold it as it crossed this the 200-day right here. I sold it there. I never got back in. Now, I wish I would have gotten back in at some point under 100 because that's been a key. But you can see right here, June 2022, hit 120, pulled back down to about 58 in October. Then it went right back up to 120. Then it sat there under that. And in September 2024, it hit 120. Well, we broke through that. And then you pulled back down and your low was 95. So maybe the support is 100. But I would say if you're looking into adding BABA, 120 probably is your price point. Because again, the fourth quarter earnings weren't horrible. They just missed the targets. And that's it. I'm not going to go over Deere. You can go over and look at the rest of the earnings. Walmart beat. We just went over that one as well. I am going to give you a education. Stop selling your winners too soon. This is a 49-minute video with Ross, okay? Ross is a momentum day trader. He trades on 1-minute candles. Understand his exit criteria. You can move to a weekly or a daily candle. If you're not a day trader, just understand how he sells. Because if you move it to a daily or a weekly, the strategies most likely will be similar, okay? Not exactly the same. He relies on just 1-minute candles. So understand you're going to have to take a strategy and conform it to it. When I had a job, my strategy was totally different. Now that I don't have a job, I do this podcast, my strategy is totally different. If I didn't have this podcast, my strategy would be totally different. You have a life, you have to change it. Okay. And investing with Chris Camillo, this is a great podcast, 50 minutes. I urge you to listen to it. He is just a great, he's like every one of us. He is somebody who made his money in the stock market. He leverages, and yes, he's got a tremendous risk tolerance, more than I have. And I thought I was pretty high based on some of my friends. Once I found out, I talked to them about trading. But he's just got next level, just next level. And now let me bring up the bonus. For those of you that made it 43 minutes in, let's look at the bonus because I want to talk to you about this. I don't want to point out charts. I don't want to point out a bunch of things, but HIMS is at 60, okay? They have a 28% short interest. I've talked about this one before. I got out at 50. I took profits. I'm perfectly comfortable with it. This stock is a hold in the quant. The valuation makes absolutely no sense. None whatsoever. They are not making money. They are not making money. But their growth, their revenue growth is 85% year over year. It is just a hyperscale grower. But people don't believe in it because it's just a marketing company. They don't make drugs. They're a compounding pharmacy that ships you the generic version of a drug, or even more dangerous, just a compounded version of the drug. So just understand that. The 52-week high is 72. But I think this is a short squeeze. I don't think this is anything other than a short squeeze. It's got a 28% interest. Okay. I was working on, hey, let me come up with some ideas for the Investing Experts podcast that I've got to do. And so I was researching stocks. And then I thought, there's another recent big winner, which is Oscar Healthcare. Doesn't have a huge short interest, but it's got 7.8. Why did I think of this? Because Oscar is actually my insurance company, and they push telehealth like you would not believe. It's free to me. I can literally just hop on and visit a nurse practitioner through chat, and they get back to me right away. And it is super simple. It is cost effective for them. And they promote this. So anybody who's like a new technology person or younger, they choose Oscar because it's just an easier one to do. They push it. So what if Oscar went into a partnership with HIMSS over telehealth? I don't know that there'd be money exchanged, but just that would legitimize HIMSS with an actual insurance company. It would also push Oscar. It's an interesting play. Both have short interest. Both have squeezed because, make no mistake, this one back here was a squeeze all the way up to 23. That was a squeeze. The company is, its valuation, 20 times forward earnings when the sector's at 10. It's not great. Life and health insurance, what's the number one? PUK. Look at this one. Year to date, PUK is up 44%. 44%. It's a $29 billion company. And by the way, I will say HRTG is probably even better valued. This one's up 1%. I brought this one up when it was at 22. You're up at 10% now. 10%? And where does Wall Street think that this one's worth? $29, which is 20% above. It's got a valuation of A. You know why? It's pretty damn cheap. It's growing greater than its peers. Profitability is unbelievable. Return on common equity, 27%. Is the gross profit margin great? No. But it's a B minus. It's not an F. Momentum, this has been great. 3 months, you're up 85%. So HRTG might be a play as well. But again, researching stocks, that's how I use Seeking Alpha. And it just came to my mind. Hey, let me look at HIMSS and Oscar. It's an interesting one. Top stocks right now, IHS has outdone HRTG. Maybe this one's getting ready to move. It's already a 52-week high. Wall Street thinks that it's worth $7, which is 25% above where it is today. You can read all about it. Now, when did it move to a strong buy? It's been a strong buy ever since, let's see, $4. It's $6 now. So IHS Holdings, it's again only a $2 billion market cap. The volume is only 74,000 shares. So be careful. Filling this one might be a little bit tough. If you have any questions, hit me up. Remember, everything's on Linktree. You can get your Seeking Alpha, Trendspider. You can get my newsletter, which is free. You can get a free newsletter every day. Every day. I do have a paid portion, and I will provide more to the paid customers probably over the next week or two. But again, get Webull. We're in a Webull market. Let's see where the market is. Let's see. Have we crashed down? We haven't crashed down. We're kind of at the same, NASDAQ down 0.82. Let's look at the chart. I mean, the Qs, they're down 0.57. 0.57%. It's not really moving. I don't expect a hyper move back to all-time highs. We need to level off a little bit. This has just been a little too hot. So, okay, I will talk to you tomorrow. See you, bye. Okay, into iMovie we go. We're going to edit this mofo head. And I got to get off here. It's already 9:50. Jesus. I chatted for a long time. And I'm going to put this one in. Okay. Bum, bum, bum. Okay. And we're going to bring that down. I'm going to bring this up. Okay. And I think I'm actually freaking red in this one. I cut my lawn yesterday too, and I took some pictures and I almost posted them. We're going to go here and we're going to do green screen. And then we're going to do another green screen one. Let's go a little tighter. Ooh. I'm going to go with all of these in a row. One. And okay. Copy that one. And put this one in. I don't know if this actually works, but who knows? Okay, and export file. 515 pod. We're not crashing, meat stick. We're not crashing. I do 5% pullback would be healthy though. Okay, I am out of here. Take care. Have fun. Have a great day. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading